Well, President Obama's chief economic advisor, Larry Summers, described the relationship between America and China as a quote-unquote balance of financial terror. It was a Prussian comment. He said that back in 2004. Will China help America recover? That's the question, and Kirby Daley is with us now of New Edge Group, senior strategist. And Kirby, we appreciate your being here with us today also. So, I mean, this really is what it comes down to, and Rick Santelli alluded to it. $2 trillion in reserves. But they've got an $800 billion stimulus plan of their own. They have a lot of uses for that money that don't involve buying American treasuries. So how are we going to make this work?
Well, I appreciate everyone's confidence that they seem to have an inside track into the Chinese government's thinking that they will just continue to buy. I wish I had that confidence. Yes, they will buy, but we have to look at the structural mechanism with which they were buying and why they were buying. They were buying because dollars were flowing into the country. Dollars that were flowing in, buying Chinese products. If they had recycled those dollars, put them into yuan in order to spend them in China, they would have strengthened their currency. They didn't want to do this. And this is where the squawk in the Senate, which, by the way, you're probably going to have a segment with Mark Haynes on squawk in the Senate with the new Wall Street being Washington, D.C.
I like squawk in the Senate.
In the Senate from Charles Schumer and Lindsey Graham and others has been that the evilness of the trade surpluses and the currency manipulation. These, are the second coming of Christ as far as they're concerned, to keep China funding these the debt spending that's going on in the U.S. And the problem is this: the foreign reserves expanded in China by about more than 400 billion in 2008. They're projected to expand by less than 200 billion in 2009. So
right, so just on an absolute basis, they can't buy as much as they were before.
With the dollars
before you even get to the other uses for the money.
That's correct. So, and if they're going to, then they're going to have to sell their currency to buy more dollars. So they better quiet down. This is where the administration and the senators better quiet down their their rhetoric toward China, because China does take rhetoric very seriously.
They certainly do, which is why it's interesting who uses the word confidence to talk about what's going on here. But what happens, what are the implications? If China were to, I mean, let's just not take an Armageddon scenario. Let's just say everyone wants stability. They're going to try to keep buying some. But for whatever reason, they can't buy as much. We have a big amount of debt about to come to market from the United States. What are the implications to America if China just really can't buy the lion's share of it?
Well, the problem is this. China, that is the situation. And the situation is the same in Japan, and it will be the same in the Middle East and all around the world. The creditor nations will not have the money to buy. At the time, right now, if you look 10 years ago, about a third of outstanding treasuries were owned by foreign governments. Now it's well over a half, and it's rising. At the time when we're going to be issuing new debt at alarming rates, what is the only answer? The only answer is for Ben Bernanke to print the money, to buy the treasuries that he is going to issue to pay for the orgy of spending, or whatever you want to call it, by this administration.
Run the risk of massive inflation down the road, but
that's
down the road.
There's no avoiding it. That's the problem here. That when you increase the amount of money at the rate at which they will have to purchase the treasuries, because the world won't be there to do it even if they want to, without dire implications that the administration and the Senate and Congress are against, then the only other option is to debase the U.S. dollar.
Kirby, Julian Robertson of Tiger has talked a lot about a trade that he has on, and it is betting that America's cost of borrowing is going to surge to levels, and he's a very dire situation. They could surge as high as 15, 20% back where it was in the early 80s, because it's very expensive to borrow when you're in a situation like the United States. What do you think is going to happen to our borrowing costs as a result of this situation? Exactly what Julian's saying.
Look, it happened in the 80s, so why can't it happen now? We hear all about this deflation. We hear about all of this complacency that China will continue to buy, that the world will continue to fund. They'll continue to fund, but they won't, as one of your guests was alluding to, fund at the levels that we're seeing right now. The cost has to rise. Again, we've seen it in the 80s. The situation is far more dire than it is now. The amount of money that's going to be printed, the amount of treasuries that are going to be issued, far larger than any time in our history. Why can't interest rates go back to 15 or 20%? Of course they will. Again, it's simple math. It's not rocket science. There's really no other out, and we don't want to face that fact. And it's going to be very difficult, and we'll try to jawbone the markets as long as we can. But at the end of the day, this is inevitable if we continue down this path. All right, Kirby, thank you so much. Kirby Daley, as we said, with New Edge, and we appreciate your coming in.